imagine, right, you're posting just a completely blockbuster quarter. You grow your top line revenue by this astonishing 34% year over year. I mean, you're raking in almost $640 million in just 3 months.
Which is huge.
Right. And your profit margins are incredibly healthy. You're signing these record-breaking deals with Fortune 100 companies, basically displacing all these entrenched legacy competitors left and right.
Yeah, the old guard.
Exactly.
Yeah.
So the financial press is, they're singing your praises. Your stock is performing. The boardroom is probably popping champagne.
Naturally.
And then, literally the very next morning, you announce that you are firing 1/5 of your entire company.
It sounds like a glitch in the matrix, honestly.
Totally.
It defies every single conventional rule of corporate physics that we've been taught to accept. Usually growth equals expansion.
Right. You make more money, you hire more people.
Exactly. You make more money, you need more people to handle the increased load, and so the org chart swells. But here, they're doing the exact opposite.
Well, welcome to this deep dive. Today, we are speaking directly to you, the listener, as we pull apart the Q1 2026 earnings call transcript for Cloudflare. Ticker symbol is NET.
Yeah.
And for those of you, managing enterprise tech stacks or just investing in the space, you probably already know Cloudflare, but they aren't just a software company anymore.
No, not at all.
They are essentially the foundational backbone of the internet. They handle a massive percentage of global web traffic, routing it, securing it, making it run faster.
Yeah, and they sit at this very unique intersection, right? Because they operate at the edge of the network.
What does that actually mean for the retail investor listening?
So meaning their servers are physically located in hundreds of cities worldwide. They're as close to the end user as possible. And because of that, they see trends developing before almost anyone else.
Like an early warning system?
Exactly. They handle roughly 500 billion requests every single second. So when the architecture of the internet shifts, they are the ones feeling the tremors first.
Which brings us back to the central paradox of this deep dive, right? The massive contradiction that we really need to figure out today. We are looking at a company that is experiencing explosive, highly profitable growth, and in the exact same breath, initiating a $150 million restructuring charge to eliminate roughly 1,100 jobs.
Yeah, that's a massive shift.
So our mission today is to uncover how they are radically rewiring their entire business model from the inside out to prepare for what they are calling the agentic AI era.
Right.
Okay, let's unpack this. As always, let's start with the hard numbers. I want to establish just how incredibly strong this quarter actually was, so we can really highlight how bizarre that layoff announcement is in context.
Well, the financials are, by any SaaS industry standard, it's a powerhouse performance. Revenue hit $639.8 million, and achieving 34% year-over-year growth when you are already operating at a multi-billion-dollar annualized run rate. That is incredibly difficult.
Because usually the law of large numbers drags growth percentages down by this stage, right?
Exactly. It's harder to double a billion than a million. But they are actually accelerating. Yeah. Operating profit came in at $73.1 million, which represents an 11.4% margin.
So they're keeping a lot of what they make.
Yep. And they generated a very clean, strong free cash flow of $84.1 million.
Okay, so the bottom line here for you as an investor is that they aren't burning cash to buy this growth. They are highly, highly profitable.
Very much so.
And looking at the customer breakdown in the transcript, they aren't relying on millions of tiny, volatile startups either. Like, the data shows they now have 4,416 large enterprise customers paying them over $100,000 annually.
That's a huge metric.
Right. And that massive client cohort is up 25% year over year. These mega clients now make up 72% of their total revenue.
Yeah, the expansion up market is really the true story in those numbers. The CFO specifically highlighted the cohort of customers spending over $5 million annually.
It's $5 million a year, just on Cloudflare.
Yeah, and that specific group grew by 50% year over year. They added as many of those massive 5 million plus customers in Q1 of 2026 alone as they did in the entirety of the previous year.
Wow. So the sales engine is just absolutely roaring. Deals over $1 million are up 73%. Gross retention is sitting at a 4-year high.
Which means once customers sign up, they never leave.
Right. They view the platform as mission-critical infrastructure. It's not some, discretionary software they can just cut when budgets get tight.
Exactly. And the CEO even described the company as the fittest it has ever been operationally. Sales productivity has increased year over year for the 9th consecutive quarter.
Okay, this is where I have to step in and play the heavy skeptic.
Go for it.
Because literally moments after detailing this absolute home run of a quarter, they announce a 20% workforce reduction. And look, Wall Street has this insatiable appetite for efficiency.
Oh, totally.
We have seen this playbook 100 times over the last few years. A tech company uses buzzwords to justify trimming headcount, just to pad their margins and boost their stock price.
Yeah, the classic efficiency play.
Right. So is this whole agentic AI-first operating model just a convenient, futuristic excuse to satisfy investors who want wider profit margins?
I mean, that is the most logical assumption to make if you are just skimming the headlines. But the granular data provided in the transcript completely disproves that traditional cost-cutting narrative.
How so?
Well, think about it. If a company is simply trying to save money, they mandate across-the-board cuts, right?
Right.
They trim 10% from marketing, 10% from sales, maybe 10% from engineering.
Just a standard haircut.
Exactly. But look at where these cuts are happening, and more importantly, where they are categorically not happening. The CFO explicitly stated that they did not touch a single quota-carrying account executive.
Wait, hold on. So the actual salespeople, the men and women holding a quota, making the phone calls, and closing those $5 million enterprise deals, their jobs are completely safe.
100% intact. Not a single one was let go.
Okay, that's wild.
Right. This restructuring is not about shrinking the company's footprint to save a dollar. It is about fundamentally decoupling their revenue scale from their headcount dependencies.
Decoupling revenue from headcount.
Yes. The CFO explained that what is radically changing is the support ratio required for those salespeople to actually function.
I need to push back on that a bit because that doesn't really track with how enterprise sales actually works in the real world.
Okay, tell me why.
Well, if I'm an enterprise account executive trying to close a multi-million-dollar infrastructure deal with, say, an aerospace company, I do not work alone.
Right, you have a team.
Exactly. I have 2 sales development reps, or SDRs, hunting for leads and booking my meetings. I have a highly paid solutions engineer building my technical demos. I have a deal desk analyst pricing out the complex contract. And I have a legal team redlining the terms.
Very expensive people.
Right. So if you fire that entire support apparatus, you choke the salesperson. How does the sales team actually function without them?
And you've just identified the exact bottleneck that agentic AI is solving.
Oh, I see.
Yeah. In the traditional SaaS model, your assumption is completely correct. To sell more software, you must linearly hire more SDRs, more analysts, more paralegals. But what Cloudflare realized is that those support roles, the data gathering, the preliminary technical sizing, the initial contract redlining, all of that is entirely solvable with autonomous agents now.
So the AI is doing the deal desk work.
Exactly. Because of massive internal AI adoption, a single account executive no longer needs a human team of 5 people sitting behind them. The agentic workflows are replacing the traditional support layer.
So they are preserving the human relationship at the very tip of the spear, the AE sitting across the table from the CIO, but they are automating that massive logistical tail behind them.
Yes. And here is the piece of data that proves this isn't a defensive cost-cutting measure. They aren't pocketing the savings.
Really?
No, the CFO stated on the call that they are taking the capital freed up by automating those support roles and deploying it to hire more quota-carrying sales capacity.
Oh, wow. So they are reinvesting it directly into more sellers.
Exactly. They are operating within the exact same financial spend envelope, but they are radically shifting the composition of the workforce toward the sharp end of the spear.
That is a fascinating organizational shift. It means the goal isn't a smaller budget at all. The goal is maximum revenue leverage.
Yep.
And the CFO even noted they expect the net capacity of their sales team's growth to accelerate throughout 2026.
Right. And the CEO went on record stating that by 2027, they expect to actually have more total employees than they did at any point in 2026.
Wait, so the headcount is going back up?
It will go up, but the roles will be completely different. You won't see armies of junior analysts or SDRs anymore. You will see highly specialized quota carriers, advanced engineering talent, and AI researchers. It's just this aggressive organizational teardown designed to adapt to a totally new paradigm.
Okay, if this really isn't a traditional layoff, but rather this aggressive evolution, then the internal AI systems they are building must be remarkably sophisticated.
Oh, they are?
Because you don't rip out the operational foundation of a multi-billion-dollar company based on some glitchy chatbot.
Yeah.
This takes us into the mechanics of what they are doing inside their own walls. They aren't just selling AI infrastructure, they are rapidly consuming their own product.
Yeah, eating their own dog food, as they say. And to understand the magnitude of this shift, we really have to look at the timeline. For the last 4 years, Cloudflare has made a fortune selling what management calls the picks and shovels of the AI gold rush.
Selling the infrastructure to the AI builders.
Right. They provide the global routing, the security, and the edge compute power for the biggest AI labs in the world. They know this technology intimately.
Yet, reading through the transcript, they were almost stubbornly cautious about adopting it themselves. Like, the CEO was highly critical of performative AI.
Performative AI is such a great term.
It really is.
It refers to companies just rushing to mandate AI usage internally just so they can issue a press release claiming they are AI first, without measuring any actual return on investment.
Just chasing the hype.
Exactly. But Cloudflare held off. They demanded empirical proof that these tools could safely handle highly sensitive, mission-critical internal data before deploying them.
But then a dam broke. Because the transcript points to November 2025 as the exact tipping point, internal AI usage skyrocketed by 600% in a 3-month window.
A massive spike.
Right, so what caused that specific spike? Why November?
Because that is the moment the technology transitioned from generative to agentic.
Okay, let's break that down for the retail investor.
Yep.
Generative versus agentic.
Sure. Generative AI is passive. You ask a chatbot to write an email, and it generates text. You copy it, you paste it.
Right, the human is still the pilot.
Exactly. But an active agentic AI has permissions. It doesn't just draft the email. It queries your Salesforce database, sees that a contract is expiring, drafts the renewal, sends it to the client, logs the interaction in your CRM, and updates the revenue forecast in your finance software.
All without you ever clicking a button.
Exactly. And when Cloudflare's internal tools gained that autonomous execution ability, adoption just exploded across the company.
And the numbers attached to this adoption are staggering. They state that 97% of their R&D team is now heavily utilizing AI coding tools.
Almost the entire department.
Yeah. And these aren't third-party tools either. They are powered by Cloudflare's own Workers developer platform. The CEO used this analogy on the call, comparing this shift to a carpenter moving from a manual screwdriver to an electric screwdriver.
Right.
He said individual team members are suddenly 2, 10, or even 100 times more productive.
Well, while the electric screwdriver is a decent analogy for raw speed, it completely misses the most important mechanism at play here, which is reliability.
How do you mean?
Well, an electric screwdriver just lets you strip a screw faster if you don't know what you're doing.
Aha. Fair point. It just amplifies your mistakes.
Exactly. But what Cloudflare has built is much more profound. The transcript reveals that a full 100% of all code contributions made to their production code bases are now reviewed by autonomous AI agents.
I really need to pause on that. 100%.
100%.
So every single line of code written by thousands of engineers that goes into the live infrastructure of the internet is reviewed by an AI before it ships.
Every single line. But think about how that AI reviewer is trained. It isn't just looking for syntax errors or missing semicolons. They train these agents on every single incident report, post-mortem, and server outage from the last 10 years of Cloudflare's operational history.
Oh, wow. Okay, that changes the analogy entirely. It isn't an electric screwdriver at all. It is like having an immortal, omniscient senior engineer hovering over the shoulder of every single developer in the company.
That's a much better way to put it.
Right. Because if I'm a brilliant new hire, I might write this elegant piece of code, but I don't have the institutional memory to know that my specific phrasing will trigger a catastrophic memory leak under heavy load, just like it did during some obscure outage back in 2018.
Right, you'd have no way of knowing.
But the AI agent remembers.
That is exactly it. They have instituted a system of tireless, uncorrelated, historically aware agents checking every single change in milliseconds. They are mathematically eliminating the human error bottlenecks that plague large software organizations.
Which is huge for their bottom line.
Huge. And the CEO noted that as a direct result of this, developer velocity has reached unprecedented levels. They are generating more new features, squashing more bugs, and burning down their legacy technical debt faster than in any previous quarter in their history.
And this superpowered productivity isn't quarantined to just the engineering department. They rolled this out across the entire enterprise.
Yeah, everywhere.
The transcript details the creation of an internal harness they named Cloudflare OS. It is currently managing thousands of AI sessions daily across human resources, marketing, finance, and legal.
Yeah, so Cloudflare OS basically acts as the central nervous system for their agentic workforce. It allows non-technical employees to run complex workflows. The system utilizes hundreds of centrally managed skill files.
Skill files, what's an example of that?
Think of a skill file as a standardized recipe that tells the AI exactly how to interact with a specific corporate system, like how to securely pull employee data from Workday or how to query a marketing budget in their finance software.
Got it.
So the management team went to every department head and asked them to break down their fundamental jobs to be done and then reimagine them using these skill files.
See, this is where the 20% workforce reduction pivots from sounding like corporate jargon to making chilling logical sense.
It really does.
Because if your HR department is suddenly utilizing a centralized OS, running thousands of autonomous sessions a day sessions that can instantly parse hundreds of resumes, cross-reference them with historical hiring success metrics, and schedule initial interviews well, the job of an entry-level HR coordinator simply ceases to exist.
It's just gone.
The old organizational chart is completely incompatible with the new operational reality.
And it forces a very uncomfortable truth onto the table for every major corporation. Cloudflare realized that as their top-line revenue scales up, their operational efficiency is now scaling even faster due to these internal agents.
Right.
So the decision to restructure was a proactive move to stay ahead of that efficiency curve. They tore down the scaffolding before the building got bloated.
But here's the most important thread connecting all of this. This massive internal productivity surge isn't just an operational quirk. The exact same infrastructure, the exact same workers platform that they are using to supercharge their own staff is the technology they are turning outward and selling to the market. And it is driving massive displacement in the enterprise sector. Let's dig into how they are actively beating the legacy hyperscalers and the incumbent hardware vendors.
The deal momentum highlighted in the transcript is a direct reflection of this platform's maturity. I mean, they aren't just selling to agile AI-native startups anymore. They are securing massive, highly complex, multi-year commitments from some of the most rigid global players in the world.
Right, and the breakdown of Q1 deals is fascinating because the details really reveal the broader industry shift. Let's look at the $8 million two-year deal with a Fortune 100 technology company.
Yeah, that's a key one.
This was specifically for a privacy proxy solution.
And the use case on that $8 million deal is incredibly telling. The customer had an urgent, immediate need to handle massive sudden scale while maintaining precise geolocation accuracy for user-initiated agentic traffic.
I really want to highlight that phrase, agentic traffic.
It's the new buzzword for sure.
But it's vital. We aren't talking about humans clicking links here. We are talking about the massive, invisible wave of AI bots that are suddenly flooding the internet, gathering data and executing tasks for users.
Right.
Fortune 100 companies are realizing that their traditional web infrastructure just collapses under the sheer volume of these autonomous requests. They need specialized routing and privacy layers just to keep their systems online. And Cloudflare delivered a fully operational custom solution for them in just 1 week.
Just 1 week. And the speed of deployment is the true differentiator there.
Because usually that takes months, right?
Oh, absolutely. Traditional hyperscalers, the Amazons, the Microsoft, the Googles, they often require months of architectural planning, provisioning servers, configuring complex virtual private clouds just to launch a solution at that scale.
But Cloudflare bypassed all that.
Because Cloudflare's network is already globally distributed and programmable right at the edge. So they can spin up a localized solution almost instantly.
And that speed advantage also drove a massive $8.7 million contract in the Asia-Pacific region. The transcript explicitly linked this win to the boom in AI-powered vibe coding.
Ah, vibe coding.
Yes, vibe coding. We need to spend some time on this because honestly, vibe coding sounds like a trendy buzzword you'd hear on TikTok, but it is driving multi-million-dollar infrastructure contracts.
It really is.
What exactly is vibe coding and why does it break traditional cloud networks?
So vibe coding is this cultural and technical shift where developers and increasingly non-technical business users interact with AI models using natural language to generate functional applications.
Okay, so plain English instead of code.
Exactly. Instead of writing lines of Python or JavaScript, a marketing manager might type a prompt saying, I want a dashboard that tracks real-time social media sentiment about our new product, cross-references it with our daily sales data, and alerts me if sentiment drops below a certain threshold.
And the AI just builds it.
Right. They dictate the vibe or the intent, and the AI writes, compiles, and deploys the underlying code.
Okay, so the barrier to creating software has basically dropped to near zero.
Yep.
If anyone who can type a sentence can build an application, you are going to see an absolute explosion in the sheer volume of micro applications and dynamic features being generated every single hour.
Exactly. And that explosion fundamentally strains traditional cloud architecture.
Why is that?
Well, if a hyperscaler has to spin up a centralized virtual machine every single time one of these millions of vibe-coded micro apps executes a function, the latency becomes unbearable, and the compute cost just skyrockets.
It's too heavy.
Too heavy, too slow. This APAC customer chose Cloudflare because Cloudflare's platform is designed to instantly execute these lightweight serverless functions at the edge of the network within milliseconds of the user, billions of times a day.
Yeah.
The legacy cloud providers simply aren't nimble enough at the extreme edges of the network to handle vibe coding efficiently.
It is a fascinating evolution of software development, but the deal that really made me sit up and pay attention was the legacy displacement story in Europe.
Oh, the insurance company.
Yes, an EEA insurance company signed a massive 5-year consolidation contract. The transcript detailed that due to years of aggressive corporate acquisitions, this insurance company's IT environment had become a complete bloated nightmare.
Which is so common in that sector.
They were managing over 600 different software and security vendors. 600.
Unbelievable.
The CTO noted that some employees were literally juggling up to 4 physical laptops on their desks just to securely access different siloed applications.
I mean, that is the grim reality of enterprise IT architecture that grew through acquisition. It is an operational nightmare. And more importantly, it is a massive security vulnerability.
Because of the gaps between the systems.
Exactly. Every time you stitch a new acquired company's network into your own, you create a seam. And hackers live in those seams.
Well, by standardizing their entire security and networking stack on Cloudflare, this insurance company was able to instantly rip out and displace 6 legacy vendors at the moment of signing. And they have 10 more active vendor displacements currently underway.
Just cleaning house.
They are targeting over $1.3 million in hard annual savings. The CTO explicitly stated he wanted a Formula One level architecture, with Cloudflare serving as the unified engine.
It is definitive proof that the era of stitching together 600-point solutions is over. CIOs do not want to manage the interoperability of dozens of specialized security tools. They want a single, unified control plane.
I hear that, but I have a major point of contention I really want to explore here. Let's talk about the defense contractor deal.
Okay, let's do it.
The transcript highlights a 3-year, $5 million contract with a Fortune 500 aerospace and defense company. This contractor suffered a severe security breach, and they had $5 billion in government revenue at risk if they didn't immediately fix their compliance failure.
Mistakes.
Extremely. So they moved from on-premise hardware to Cloudflare's cloud platform. Wait, how does a cloud company beat an entrenched physical hardware vendor on a multi-billion-dollar government defense contract? Aren't those heavy physical server appliances sitting in a locked basement supposed to be the absolute gold standard for defense security?
Historically, yes. I mean, the industry operated on what is called the castle and moat security model.
Right.
The belief was that if you bought highly expensive physical hardware firewalls, the moat, and put all your employees and servers inside a secure physical building, the castle, you were safe.
And the transcript specifically calls out the vulnerabilities of incumbent hardware players, pointing directly at Palo Alto Networks struggling with these legacy models.
Yeah, because the castle and moat model physically breaks down in the modern era. Your employees aren't in the castle anymore.
They're working from home.
They're working from home, at coffee shops, or traveling globally. Furthermore, physical hardware is incredibly difficult to update. When a severe vulnerability is discovered, a legacy hardware vendor like Palo Alto has to push a patch.
And then the customer has to install it.
Right. The defense contractor has to schedule downtime, manually update dozens of physical boxes spread across different facilities, and just pray the patch doesn't break their custom configurations. The supply chain delays and the slow patching cycles mean these hardware boxes often sit vulnerable for weeks.
So the physical hardware, which was supposed to be their ultimate defense, actually became a severe liability because it couldn't adapt fast enough to meet the new stringent government compliance specs following the breach.
Exactly. When you have $5.5 billion in government contracts at risk, you cannot wait 6 weeks to secure your network. This is where Cloudflare's cloud-native architecture wins.
How fast did they move?
They delivered a fully compliant zero-trust solution, which specifically included a technology called browser isolation in a matter of weeks. The incumbent hardware vendor literally could not architect a solution to meet the compliance timeline.
Let's break down that technical jargon for a second for the listeners. We hear zero trust and browser isolation thrown around constantly in the tech press. Mechanically, what does browser isolation actually do that a physical firewall cannot?
Okay, think about it this way. Clicking a link on the internet is essentially downloading unknown, potentially hostile code onto your computer and just hoping your antivirus catches it if it's malicious.
Right, which is terrifying when you think about it.
In a highly secure defense environment, that is unacceptable. So browser isolation treats every website like a potentially explosive package. Instead of loading the website's code directly onto the defense contractor's physical laptop, Cloudflare intercepts the request at their edge server, which is hundreds of miles away.
Okay.
They detonate the website, load the code, and execute it on their secure server.
Okay, so the malware fires, but it fires on Cloudflare's disposable server, not the contractor's laptop.
Exactly.
How does the user actually see the website then?
Cloudflare streams a harmless, interactive video feed of the website back to the user's browser. The user can scroll, click, and type seamlessly, but no actual code from the target website ever touches their local machine.
That's incredible.
It is like handling that explosive package from behind bomb-proof glass using remote robotic arms. A physical firewall sitting in a corporate basement cannot do this efficiently without introducing massive latency because it has to route all the traffic back to a central location. Cloudflare does it instantly at the edge.
Because they have servers everywhere.
Right. And as the CEO noted, hardware companies seem to have 9 lives, but the sheer resilience and flexibility of cloud-native networks is finally forcing a massive transition, even in the most paranoid regulated industries on Earth.
It is a complete architectural paradigm shift. But winning these massive enterprise deals, especially serving the underlying infrastructure for these new AI companies, requires a radically different approach to moving bits and bytes.
Yes, it does.
You cannot just be a clever software layer. You have to master the physical reality of compute power. And that brings us to the hidden structural advantage of Cloudflare, what we can confidently call their hardware moat.
And this is perhaps the most technical element of the transcript, but it is fundamentally the most important part of their long-term strategy.
For investors, this is the core of the bull thesis.
Absolutely. To understand why Cloudflare is aggressively outmaneuvering the competition, you have to clearly understand the stark difference between their physical infrastructure and the infrastructure of the major hyperscalers.
The transcript laid out a pretty brutal, almost dismissive assessment of the hyperscaler business model. The CEO explicitly stated that the core hyperscaler business is essentially to buy a physical server, rack it in a massive data center, and then try to lease that specific server back out to a customer, ideally charging 5 times what they paid for it.
It is entirely a landlord model.
A landlord model.
Yeah. They buy the physical real estate, the server rack, the cooling, the silicon, and they rent you the space. The fatal flaw with that model, particularly as we enter the AI era, is utilization rates.
Because the hardware is so expensive.
Insanely expensive. If Amazon or Microsoft buys a highly expensive NVIDIA GPU, but no specific customer is currently paying an hourly rate to rent it and run a workload, that GPU sits completely idle. It burns electricity, it depreciates in value, but it generates 0 revenue.
And here is the stat from the call that absolutely blew my mind. The transcript claims that across most of the major hyperscalers, their current GPU utilization rates are sitting in the single digits.
Single digits. Let that sink in.
We are talking about billions of dollars of the most advanced silicon on the planet, just sitting there doing absolutely nothing 90% of the time, just because the landlord hasn't found a tenant for that specific hour.
It is a staggering inefficiency. And it forces a very dangerous financial dynamic. To grow, the hyperscaler must constantly invest ahead of demand.
Buying servers before they have customers.
Right. If they don't have empty, unused servers ready and waiting to be leased, they lose the customer to someone who does. So they are forced to pour massive amounts of capital expenditures, CapEx, into building out capacity that they can only hope someone will eventually rent. They are gambling on future demand.
Let's contrast that massive inefficiency with Cloudflare. How are they treating their global network of servers differently?
Cloudflare completely rejects the landlord model. They do not treat their servers as individual units to be rented out to specific customers.
Okay, so what do they do instead?
Instead, they view their entire global footprint spanning over 350 cities worldwide as one singular, massive, giant scheduler.
A giant scheduler.
Yes. When Cloudflare deploys a server rack in a city like Tokyo or Frankfurt, that rack contains CPUs, GPUs, memory, and storage. But they refuse to rent out that specific Tokyo GPU to a single customer.
They won't let you just buy it.
No. Instead, they accept computing tasks from anywhere on their global network, and their routing software dynamically assigns that task to wherever there is available idle capacity in the world at that exact millisecond.
You know, it reminds me of the early days of the internet. I remember being in college and buying a physical gateway server for a project, you know, the heavy boxes that shipped with the black and white cow print on the cardboard.
Oh yeah, the cow print.
You plugged it into the wall, gave it an IP address, and that specific box was your entire world. If it went down, you went down.
Huh.
The hyperscalers, despite all their modern marketing, are still functionally operating that way with AI hardware. It is just a highly polished, incredibly expensive version of renting a physical cow print box to a customer.
That is the perfect way to visualize it. The hyperscalers are essentially renting you the digital equivalent of that isolated gateway box. Cloudflare has abstracted the concept of the physical box away entirely.
Just a fluid network.
Right. And because of their sophisticated routing capabilities, they are pushing their GPU utilization to approach their CPU utilization levels. The transcript notes they're targeting utilization rates in the 70 to 80% range.
Single-digit utilization for the trillion-dollar hyperscalers versus 70 to 80% utilization for Cloudflare. I mean, that is not a marginal improvement. That is a totally different species of business. Mechanically, how do they actually achieve that high watermark?
They achieve it by dynamically routing AI inference tasks based on the specific complexity of the request.
Let's define inference for the listeners.
Okay, it's important to distinguish between AI training, which requires massive centralized clusters of GPUs crunching data for months, and AI inference, which is the actual execution of a trained model when a user asks it a question.
Training is building the brain, inference is using it.
Perfect, exactly. Inference is lightweight and fast. If a customer sends a simple inference request, Cloudflare's giant scheduler will instantly route that task to a cheaper local CPU that happens to have a few spare cycles.
And if it's complex?
If the request is highly complex, it instantly routes it to a server equipped with an advanced GPU. They match the specific workload with the optimal piece of silicon dynamically behind the scenes without the customer ever needing to provision or worry about a specific server.
So if we pull back and connect this to the broader financial picture of the earnings call, this CapEx efficiency fundamentally changes their profitability profile.
It absolutely does. The CFO made a point to highlight that their network CapEx was only 9% of revenue in the first quarter.
Wow, single digits.
Moving forward, they anticipate network CapEx to remain incredibly lean, representing only 14 to 15% of total revenue for the full year 2026.
Because they aren't gambling on empty servers.
Exactly. This structural architectural advantage allows them to invest behind demand. They do not have to gamble billions of dollars buying servers hoping customers will show up. They utilize the massive capacity they have already built to route global internet traffic, and they simply use the fractional idle cycles between routing web pages to process AI inference tasks.
This connects directly back to segment 2 when we were discussing their massive internal AI adoption. This is exactly why their internal AI operating costs are so incredibly low compared to their peers.
Yes.
When Cloudflare's HR team or engineering department is running thousands of autonomous agent sessions a day, those requests are not being sent out to Microsoft Azure or Amazon AWS, racking up massive third-party API bills. Those internal workflows never even leave the Cloudflare network.
They stay in-house.
They are running for essentially zero marginal cost on the idle capacity of their own proprietary servers.
Precisely. They have architected a perfectly closed-loop ecosystem. They are maximizing the efficiency of every single piece of silicon they own. It is a massive structural moat that is incredibly difficult for a traditional cloud provider to replicate.
Because to copy it, they'd have to destroy their own business.
Exactly. The hyperscalers would have to tear down their highly lucrative landlord business model and rebuild their architecture from the ground up.
And this highly efficient, globally distributed infrastructure is perfectly timed for what Cloudflare's management believes is the most dramatic, disruptive shift in the entire history of the internet.
The agentic shift.
Yes. We have spent the last 45 minutes talking about humans using AI, developers getting faster, and legacy hardware being replaced. But the true structural earthquake is what they're calling the rise of the autonomous agent. This brings us to what management refers to as Act 4, and the radically changing economics of the agentic web.
This is where the conversation shifts from discussing corporate operational efficiency to discussing the fundamental future of how the internet functions, and more importantly, how it survives economically.
The core prediction management made on this earnings call is wild and frankly a little terrifying for anyone in media.
Very terrifying.
They stated with high confidence that non-human agentic traffic will surpass human traffic on the internet by 2027.
2027.
We're talking less than a year away from a global tipping point where autonomous AI bots outnumber human users clicking links.
And to understand the catastrophic impact of that tipping point, you have to think about how the internet currently makes money.
It's basically ads and subscriptions.
Right. For the last 2.5 decades, the entire economic foundation of the web has been built on those two pillars, visual advertising and human subscriptions. And both of those models absolutely require a human eyeball looking at a screen.
Right. The entire programmatic ad industry exists because a publisher writes an article, I navigate to their website, and an advertiser pays a fraction of a cent to flash a banner ad for running shoes in front of my face, hoping I click it.
But the CEO used a brilliant, simple example to illustrate how agents destroy that model.
The camera example.
Yes. If you, as a human being, are looking to buy a new digital camera, you might spend an hour visiting 5 different photography websites to read reviews, compare specs, check prices. During an hour, you are served dozens of ads, and those 5 websites monetize your attention to pay for their servers and their writers.
But if I tell my personal AI agent, find me the best digital camera under $1,000 for low-light photography, the behavior completely changes.
The agent doesn't visit 5 websites. It visits 5,000 websites in a matter of 2 seconds.
5,000.
It ruthlessly scrapes all the data, synthesizes the reviews, compares the pricing history, and presents you with the single best option in a clean text interface. The human never navigated to a website. The human never saw a single visual advertisement.
But those servers still took the hit.
Exactly. Those 5,000 websites still incurred the heavy server compute costs of hosting the data and serving it to your AI agent. They provided the value, they paid the bandwidth cost, but they made zero revenue because an autonomous agent cannot be monetized with a banner ad.
That scenario entirely breaks the fundamental economic model of the web. If agentic traffic surpasses human traffic next year, ad-supported publishers from local news stations to massive tech blogs are going to go bankrupt.
They won't survive.
They will be crushed under the server costs of being scraped by AI, while their ad revenue trends to absolute zero.
Which is exactly the existential crisis Cloudflare is trying to solve with what they're calling Act 4. Because Cloudflare sits geographically and architecturally in front of so much of the internet, acting as the bouncer and the router for 500 billion requests a second, they have a unique seat at the table to define what the new monetization model looks like.
The toll booth.
Exactly. The hyperscalers are too centralized to intercept this traffic efficiently. Cloudflare catches it at the edge.
And the transcript proves they are building the infrastructure for this new economy right now. Their developer platform, which is the foundational layer for engineers building these AI agents, just crossed 5.5 million active developers.
They added 1 million new developers in Q1 alone.
1 million in 3 months. The builders of the new internet are flocking to their tools.
But as they facilitate the rapid creation of these scraping agents, they are simultaneously stepping in to manage the highly contentious relationship between the AI companies and the content owners. They're already dominating the media space by giving major publishers like Condé Nast granular tools to detect and explicitly block AI bots from stealing their ad-supported content without permission.
Here's where the strategy gets really nuanced and interesting, though. For investors, this is the genius move. It is a dual nature. They want to provide the shield to block AI from stealing from publishers who want to be protected.
Right.
But Cloudflare also hosts their own massive libraries of developer documentation. For their own public docs, they want the AI to read it. They desperately want their platform instructions scraped and embedded into every large language model in the world so that when an AI writes code, it defaults to writing Cloudflare code.
It highlights that the solution to the agentic web isn't a blunt instrument. It isn't a blanket block-all AI firewall. It requires highly nuanced, granular, edge-level control.
So the publisher sets the rules.
Right. A website owner needs to be able to dictate, you can freely scrape my public marketing landing page, but you absolutely cannot scrape my proprietary research articles unless your agent pays a toll.
And that toll is the holy grail they're chasing. Microtransactions.
The microtransaction, yes.
If the visual ad model dies with the human eyeball, the only logical replacement is a system where an AI agent automatically pays a tiny microscopic fraction of a penny to access a specific piece of premium content.
But here is the technical hurdle. Currently, no financial system on Earth can handle the transaction volume required to process a fraction of a penny across billions of requests a second. The traditional credit card rails and banking networks would instantly collapse under the latency and the fee structures.
So Cloudflare is positioning themselves to build, or partner to build, that foundational micropayment infrastructure. Because they are already the router, if they can also become the toll booth that facilitates fractions of a penny per agentic request across 500 billion requests a second, they literally redefine how value is exchanged on the internet.
It's incredible.
They transition from being a security and routing company to effectively becoming the central bank of the agentic web.
And while they are architecting that massive future, they are simultaneously optimizing the brutal reality of their current business. We noted the massive influx of developers to their platform. Historically, Cloudflare gave away a tremendous amount of free services and bandwidth to developers as a loss leader.
Just to get them in the door.
Right, to build goodwill and to train their global security models. Now, they are aggressively shifting massive amounts of that historical free developer traffic into highly lucrative paid tiers as those developers scale their agentic applications into commercial products.
The CFO briefly mentioned that this transition is causing some minor short-term gross margin compression because they are moving server costs around on the balance sheet to support the AI build-out. But the underlying unit economics are incredibly strong.
Very strong.
They are publicly targeting a Rule of 50 efficiency metric next year. Let's briefly define that for the audience. The Rule of 50 is a SaaS metric that combines a company's revenue growth rate with its free cash flow margin. If you grow at 30% and have a 20% margin, you hit 50.
Right.
It is the gold standard for balancing aggressive expansion with disciplined profitability.
Targeting the Rule of 50 shows that management is not just building cool, visionary technology for the sake of a press release. They are ruthlessly focusing on the fundamental unit economics of this new era. They are aggressively, systematically turning developer mindshare into sustained, highly profitable, compounding revenue.
It is a phenomenal high-wire balancing act. We have covered a massive amount of technical and financial ground today, and every single thread traces back to that jarring central paradox we started with.
Layoffs.
Right. We watched a company deliver a massive earnings beat, accelerating to 34% revenue growth, signing record enterprise deals, and completely dominating rigorous government compliance contracts against entrenched legacy hardware vendors. And we discovered that their overwhelming external market success is entirely driven by their radical internal transformation. They aren't just selling the future, they are acting as their own most demanding, ruthless customer.
Exactly. They adopted AI so aggressively that their human engineers are essentially supercharged by immortal autonomous code reviewers. Their daily corporate operations are being managed by a centralized internal OS running thousands of skill files.
It's all connected.
And they realized they could operate so much more efficiently that it fully justified a highly controversial 20% workforce restructuring today, completely redefining the sales support ratio just to prepare for the reality of tomorrow.
They tore down the old model.
They aren't just passively riding the AI wave, they are actively laying the concrete for the toll booths and the infrastructure of the upcoming agentic internet. So from an investor standpoint, looking at net, the bottom line here is a heavily bullish signal for their long-term structural advantage. I agree. But it also raises an incredibly important question, and it is something everyone listening needs to deeply, personally consider. We have just spent an hour analyzing how a highly profitable, rapidly growing, cutting-edge tech giant realized they could operate exponentially more efficiently by fully integrating AI agents into their core workflows.
The math was undeniable.
The realization was so profound and the math was so undeniable that it led to a 20% shift in their workforce during a record-breaking financial quarter.
So the question for you, the listener, is this. How insulated is your own company's business model or even your own daily individual workflow from this exact same agentic transition in the next 12 to 18 months?
Happen for everyone.
If the very companies building the foundational architecture of the internet are radically restructuring their org charts because of these tools today, what will your industry and your job look like tomorrow morning?
Something to think about.
Thank you for joining us on this deep dive. Keep exploring, keep questioning the narrative, and we'll see you next time as we continue to map out this rapidly changing digital landscape.